A very good afternoon. Let's get into your markets now. Asian markets traded higher, but traders were still said to be cautious ahead of the US's implementation of new tariffs on its trading partners, with the 25% tariffs on auto and auto part imports expected to go ahead. Traders were also said to have picked up some bargains after the market selling off quite dramatically in recent weeks. The Nikkei share average ended up 0.019%. The Hang Seng Index rose by 0.4%, while the Shanghai Composite Index closed up by the same margin. US stocks traded mixed today. The last day of a highly volatile quarter, the Dow Jones and S&P 500 ended up putting on a good showing, but sentiment is largely battered. This as market players remain uncertain about the shape and form of impending tariff measures set to be effected from tomorrow. The Dow Jones Industrial Average rose by 1%. The S&P 500 closed up 0.55%, while the Nasdaq Composite Index lost 0.14%. And for correction, this of course happened last night when the markets closed in the United States. In terms of our local markets, we see that the all-share index is currently trading in positive territory. It's up 1.4%. The local currency is trading at 18.36 against the US dollar, 19.82 vis-a-vis the euro, and 23.72 against the British pound. Some weakness there relative to major trading currencies. And on the commodities front, we see that gold is trading at $3,132 an ounce. Perhaps that's another all-time high. It just keeps on going higher and higher. Platinum is trading at $989 an ounce, while Brent crude oil is trading at $74.82 a barrel, also on the up. So let's get into conversation now with Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. Thanks very much, Makwe, for joining us. When you reflect on the first quarter, that is the months of January, February and March, what is your reflection on the markets? Given that so much has happened, how did we start and how did we finish?
You know, locally we managed to finish good because we are up almost 5% as compared to the S&P, 500, which is down just around 4%, and the Dow down almost 1.3%. But here it has been a very volatile and for unnecessary reason, and the headwinds will continue as we have seen that we are starting Q2 today. But the way we finished Q1 yesterday, that confirms that all the things that we've been worried about, and given that tomorrow is what they call Liberation Day, according to Trump, where he will be imposing all those tariffs. But market participants are saying we are disappointed in the sense that the campaigning that he's been doing, the transformation or the things that he promised to implement, he didn't implement them. But maybe he's doing this on purpose so that he knows that the tariffs will let the U.S. economy to at least struggle, and that will give him all the reasons come September that he can impose those tax cuts he has been promising. And the reason will be, we can see the economy is not doing that great. Then we just had to stimulate that. But yes, the local boss didn't do badly when it comes to Q1, but it has been just more of a casino more than anything.
Yeah, one can presume that these nations have decided to, team up together because of the Trump tariffs. But we heard that China, South Korea and Japan, nations that don't always agree with each other, have actually decided to join forces to boost regional trade. Do you think that's going to serve as a cushion for them against the current trade tariffs that have been put forward by Donald Trump?
Yes, and that's a very nice wake-up call, as we've seen back home here, that we're also starting to try to push through and make sure that we start implementing as speedily as we can the African free trade. And it just shows you that as much as we operate in a global society, we don't have to forget our regional neighbors, and as well that we don't even have to rely on one superpower going forward. And yes, this is a necessary wake-up call, and unfortunately it's coming in a way that people didn't expect it to happen, but it only makes sense to start trading and doing business with people who are very close to you, and even the logistics thereof. It's not going to be too hectic for you to trade with your neighbors compared to getting things to travel 10,000 kilometers away from where you are. I'm not saying you don't have to trade with them, but for me, it makes super sense.
Yeah, absolutely. What's your reading of the local currency? It's lost a little bit of ground relative to major currencies. We know, of course, we've got the trade tariff story, exogenous factors. potentially affecting us. But then we also have our local political situation where we're near a deal. No, we're not near a deal. Lots of confusion around what's happening with the budget and whether it's going to be passed through. To what extent do you think this is impacting on the rand? And I see that ratings agency Moody's, for example, has already said that this uncertainty is not good.
Definitely, and I think today is more of our local stories, more about the national budget, which is due tomorrow to be voted on. And we have seen that before, the rand has continued to be resilient. And you are right, it's happening on a day when the likes of commodity prices are firmer. I think it's maybe platinum, which is down, the rest are firm. And I'm saying that because the rand itself is a commodity currency. So I agree with you that today's reaction to the rand is merely whether are we on or off comes to the budget. But I think most likely the rand, as much as it is weakened today, that is why maybe the weaknesses are not exaggerated, is because market participants continue to believe that both anchor parties, they know very well that they need the GNU to hold. So the question here is to save face that whoever agrees to another thing, it must be in a very decent way. And we're hopeful that definitely tomorrow we'll get it to be passed. The question here is, how do you save face?
Yeah, absolutely. So then the last thing that I wanted us to discuss was the ABSA PMI report that came out today. Always comes out on the first day of a given month. Looking at the manufacturing sector, the gauge moved up 4 points to 48.7 points. But when we look at indexes, anything below 50 is still considered to be in contraction territory. How are you seeing the manufacturing sector and the key drivers behind it?
You are right, and this is the fifth month in a row that has been in negative territory. But we've seen that at least export sales have managed to help us and to manage to tick up a little bit. But it continues to be a worry because what used to affect it negatively, load shedding, you can say it has been dealt with. And yes, logistics, we are working on that. But with tariffs coming into place, then, and I'm mentioning tariffs because the largest component when it comes to our manufacturing is cars and accessories thereof. So if we're going to have tariffs on that, then that might impact manufacturing negatively going forward.
All right, Makwe, we're going to leave it there. Thank you very much for your time. As always, that was Makwe Masilela. Of course, he is the Chief Investment Officer at Makwe Fund Managers.